Non-integral accounts. Non-integral accounts. So what do you mean by non-integral accounts? Non-integral accounts. Non-integral accounts. So generally financial accounts and cost accounts separately maintained. Normally we have to separately maintain. Financial account records are separate, cost account records are separate. For example, if you're going to manufacture any product, normally the various expenses are involved. We have to register in financial accounts as well as in cost accounts. If two books of accounts are separated, it is called non-integral. If two books are accounts to be integrated, it is called integral accounts. First, my point is non-integral accounts. We have to maintain two separate set of books. Two separate set of books. Two separate set of books. One is financial, another one is cost. Right. What are the entries to be posted in financial accounts and cost accounts and integral accounts? We'll see. So if two accounts are posted combined together, it is called integral accounts. It is called integral accounts. Integral accounts. Cost and financials are integrated, is integral. Cost and financial accounts are separated, it is non-integral accounts. Right. We'll see one by one how the entries to be posted in non-integral and integral accounts. Right. So this is the flow chart for non-integral account system of flow chart. Right. Now here I am explaining one by one. So material, labor and production overheads all are transferred to WAP control account. All are transferred to WAP, work in process control account. Material involved in the product, labor involved in the product, production overheads are transferred to WAP control account. After WAP control account, we have to transfer this item to finished goods control account, FG account, finished goods control account. Similarly, admin expenses, admin overhead also transferred to finished control. Admin overhead also transferred to finished control. After finished control, it is transferred to cost of goods sold account. After cost of goods sold account, it is transferred to cost of sales account. Similarly, any expenses related to selling related expenses, that is also transferred to cost of sales account. Selling related expenses, sales expenses also transfers to cost of sales account. That's it. So this is a flow chart for non-integral accounting system. Now we'll see one by one how the entries to be placed in financial accounts, cost accounts and integral accounts one by one. Number one, first credit purchase of material. Whenever the materials are purchased through credit, what is the entry normally we'll do in financial accounts? Purchase account data to creditor account. What is the entry? Purchase account data to creditor account. Right. This is truly for credit purchase. Same entry in cost account. Purchase to be referred hereafter as material control or stores control. Stores control account. Debtor to general ledger account or cost ledger account or cost ledger control account. General ledger or cost ledger. Purchase to be called material control in cost book. Creditor to be called general ledger or cost ledger in cost books. Similarly, in integral books, so general ledger will not be placed in integral books. So we have to refer, we can take debit in cost account to cost control and credit in financial account, credit in financial books. What is the credit in the financial books? Creditor. What is the debit in cost books? Material control. So in integral accounts, the entries are material control account debtor to creditor. So debit from cost, credit from financial. So creditor account. So entries in the financial accounts, purchase to creditor, entries in the cost account, material control to general ledger, entries in integral accounts, material control debit from here, material control and credit from here. So material control to creditors account. Right. Similarly, second transaction, whenever the cash purchase of material, the entries are, so cash purchase of material, the entries are in financial account, in financial accounts, in cost books, in integral books. In financial, the entries are purchase account debtor to bank or cash, But in cost control, purchase hereafter to be referred as material control, material control account debtor to, we are not supposed to say bank, cash in cost control, we have to refer hereafter general ledger adjustment account, or cost ledger adjustment account, But in integral accounts, in integral books, we have to take debit from here, we have to take credit from here. We should not take this and this. Purchase, there is no placement. You have to say material control to cash or bank or cash. So in integral books, we have to say material control account debtor to cash or bank, right? Next, number 3 entry. Purchase of special material for direct use in job. Now here entry number 3, direct material purchased is directly used for production. Whenever direct material is used for production, in financial accounts, the entries are purchase account debtor to cash or creditor account. But in cost books, purchase to be referred as purchase to cash, right? No, it is a direct material. In the cost, whenever the direct material, any word about direct material, cost we have to refer only WAP. Either direct material or direct labor or direct expenses, we have to say only WAP. So WAP control account debtor to GLA. General ledger adjustment control account to GLA account. Cash and creditor we are not supposed to use in cost. The general term is GLA control. Now integral books, which means financial and cost combined. So in integral books, I means integral. In integral books, so we can take. So debit WAP control, credit cash. So WAP to cash. We are not supposed to use purchase and GLA. We have to use only WAP to cash. Debit from cost, credit from financial. So WAP control account debtor to cash. WAP to cash. Integral accounts, right? Number 3, this is number 3 entry. Number 4, purchase of material for repair. Number 4th transaction, purchase of material for repair. When in financial books, whenever materials are purchased for repair, the common entry, purchase account debtor to cash or creditors. But in cost books, these materials are for indirect material. This is for indirect. Whenever indirect materials are purchased, general entry, factory overhead control account data, because it is indirect material. Factory overhead control or work overhead control or manufacturing overhead control or production overhead control. Factory overhead, work overhead, production overhead, manufacturing overhead, all are once and same. So factory overhead control account data to general ledger control account. Next, integral books. We have to take debit from factory, debit from cost control, that is factory overhead control. Credit from financial. So entry factory overhead control account debtor to credit from financial. to cash account, to cash account. This is cash or creditor, we can use it. This is number 4, right? Number 5, number 5, material return to store. Number 5, material return to store. Whenever materials are purchased, so material to purchase to creditor. Now we are returning. So cancellation entry in financial books, creditor account debtor to purchase. So creditor to purchase. These financial books. In the cost books, reverse entry. So we have seen already. Middle control to general ledger. Earlier. Now reverse entry. GLA control account debtor to material control cost. Next transaction in integral books. So in integral accounts, so debit we can take from financial, because GLA is a word we are not supposed to use, purchase is not, we are not supposed to use integral books. So creditor from financial, material control from cost. So you can take debit creditor, credit material control. So entry creditor account debtor to material control account, This is number 5. Creditor to material control. Number 6. Number 6th transaction, payment to creditor for supplies made. Whenever the payments are made in financial books, we know creditor to cash, creditor account debtor to cash. So creditor to cash. So creditor and cash are involved. There is no transaction in cost books. Creditor is a word we are not supposed to use in cost books. Cash is a word not supposed to be used in cost books. Therefore, in cost books, there is no entry. So creditor, debtor, cash, if these things are available now, we are not supposed to use it, because we are using only GLA to GLA. That is not possible. So there is no entry here. Because GLA to GLA we are not supposed to post it. Therefore, there is no entry here. But in integral accounts, there is no cost transactions, no. So financial entry will be same as it is in integral. So creditor account debtor to cash. In integral, because there is no cost entry. Financial entries are integral entries. Number 6. Number 7. So issue of direct material to production shops. So this is interdepartment transfer. From stores to production, materials are transferred. Direct materials are transferred. Therefore, this is interdepartment transfer. There is no outside agency involved. Therefore, there is no entry in financial books. But in cost, so it is direct material issued. Whenever direct materials are issued, WP control account debtor to it is coming from material control only, stores only, no, to material control. So WP control to material control. But next, integral accounts. There is no financial entries. Cost entry remains integral entry. So entries in the cost are WP control account debtor to material control account. Number 7. Number 8. Issue of indirect material to production shop. From the stores, indirect materials are moving to production. So in financial books, there is no entry. Reason, this is interdepartment transfer. From stores department to production, there is no entry. But in cost books, WIP control account debtor. So this is indirect material. No, this is indirect material. Therefore, factory overhead. Direct material means WAP. This is indirect material. Therefore, factory overhead control account data. See, if it is a direct material, WAP control debited. If it is indirect material, factory overhead control account to be debited. Factory overhead or production overhead or manufacturing overhead or work overhead. So, indirect material means factory overhead control to be debited. Direct material means WAP control. Indirect material means factory overhead control account data. 2. It is coming from material control stores only, no. Therefore, material control account to be credited. Next, integral books. So there is no entry in the financial books. What will be the entries in the cost is the same entry, which means factory overhead control account data, same entry in the cost in the integral only. 2. Material control account. Number 8. Factory overhead to material control. Number 9. Return of direct material to store. Again, this is interdepartment transfer from production to stores control. There is no entry. This is interdepartment. There is no outside agency involved. There is no entry. Cost control. Reverse entry. What is the reverse entry? So, direct materials are issued means WAP to material control. Now they returned, coming back to stores. So, material control account data 2. So, return of direct material. So, this is direct material returned. So, material control to WAP control. So, direct materials are returned. Therefore, material control to WAP control. Next, integral. There is no entry in the financial. What will be the entry in the cost? The same entry we have to post in integral accounts. So, material control account data to WAP control. Direct materials returned. Material control WAP. Number 10. Indirect materials are returned. Indirect materials are returned. Number 10. Indirect materials are returned. Whenever indirect materials are returned, again it is going to be interdepartment transfer. There is no entry in the financial books. But in cost books, it is coming back to stores. Indirect material. Therefore, material control account to be debited. It comes from factory. Direct materials are transferred. Direct materials are returned to WAP. This is indirect material return, no. So we can say factory overhead control. So indirect material return means material control to factory overhead. That is store. It is returning to store from factory. Material control to factory overhead. Next, integral books. In integral books, so finance and cost to be integrated. There is no financial entry. Whatever be the entries in the cost, same entry will come. Therefore, material control account data to factory overhead control account. Material control to factory overhead control. Number 10. Number 11. 11th transactions. Material transfer from one job to another job. If one job to another job means in financial there is no entry. Cost there is no entry. Integral there is no entry. There is no entry in financial. There is no entry in cost. There is no entry in integral. So one job transfer to another job. Material transfer from one job to another job. Right. Next one, 12th entry. Adjustment of normal depreciation. In stock. So in financial, normal depreciation or normal appreciation, there is no entry. In financial for stock. But cost control, we have entry. So cost control, we have entry. This is Normal depreciation, we are adjusting depreciation. Depreciation is a loss. It should be transferred to normal depreciation. It should be transferred to factory overhead control. It should be transferred to factory overhead control. Factory overhead control account. So depreciation means there is a reduction of material. There is a reduction of material. Therefore, middle control to be credited. Therefore, middle control to be credited. Depreciation is a loss. Factory overhead we are transferring. Depreciation is going to reduce the material cost. Therefore, material cost to be credited. Middle cost to be credited. Means reduction of material. Reduction of material. Next, integral. Whatever the increase in the cost, same entry, which means factory overhead control to material control. Factory overhead control to material control. Number 12. Number 13, 13th transaction. So 13th transaction, that is surplus, normal surplus in stock. Previous one depreciation, this one surplus. Normal surplus in stock. There is no entry in financial. But in cost, this is normal surplus. Surplus should be transferred to material control. Surplus to be transferred to depreciation means material to be credited. Surplus means material to be debited. So material control account data to factory overhead. Material control account data to factory overhead control. So previous one factory overhead to material control, this one material control to factory overhead. So normal surplus means transfer to material control to factory overhead. In integral books, there is no financial transaction. What are be the entries in the cost? Books? The same entry. So material control account data to factory overhead control. Material control to factory overhead control. Right. This is material control to factory overhead control. This is number 13. This is number 13. Okay, number 13. Now number 14. So number 14 here, payment of wages and salaries. Payment of wages and salaries. So in financial books, whenever the wages are paid, wages account data are to cash or bank. Right. But in cost books, wages to be called wages control account data to, we are not supposed to use the word cash and bank in cost books. We have to use the word general ledger adjustment, GLA, general ledger adjustment account or cost ledger adjustment account. Next, integral books. Here we have to take wages control from cost, cost to cash and bank from financial. Debit wages control, credit cash. So wages control account data are to cash or bank. Wages control to cash or bank. This is integral. Next, wages to be distribution. There are two types of wages. One is direct wages, another one indirect wages. Number 15, distribution of wages. Number 15, distribution or allocation. Allocation of wages. There are two types of wages. One is direct wages, another one is indirect wages. Whenever the wages are allocated, there is no entry in financial books. But in cost, what are the wages normally will give? Wages will be transferred to direct wages. Whenever the wages are transferred to WEP, direct wages are given now, it is WEP control account data. WEP control account data. Indirect wages are given means it is related to factory, then factory overhead control account data. Direct wages means WEP control account data, allocation of direct wages, WEP control account data, allocation indirect wages, number 1 factory overhead control account data. Next another indirect wages allocation, admin. So admin overhead control account data. Another indirect wages, selling and distribution overheads, selling and distribution overhead control account data to wages control account, right. This is indirect wages, direct wages WEP, indirect wages factory admin selling, it is transferred to wages control, right. There is no financial entries here, cost only we have entry, therefore integral accounts are integral books, in integral books same entry will come. So WEP control account data factory overhead indirect wages allocation, factory overhead control account data admin overhead control account data S&D selling and distribution overhead control account data to wages control account, to wages control account. So this is the entry in integral books, right. Now the wages are allocated. Number 15 is over. Next number 16. Transaction number 16. So transaction number 16, payment of expenses. So whenever the payment of expenses are involved, generally expense to cash in financial books. Expense account data are to cash, expense to cash. But in cost books, expenses of there are two types of expenses. One is direct expenses, another one is indirect expenses. Suppose direct expenses are involved, you can treat it as WEP control account data. If it is direct expenses, suppose if it is indirect expenses means it may be factory overhead control account data. This is indirect expenses. Similarly, admin overhead control account data, this is also indirect expenses. Similarly, selling and distribution overhead control account data, this is also indirect. So to cash we should not say, we have to say only GLA. Okay, to GLA, right. In integral books, so debit we have to take from cost, credit we have to take from financial. Debit WIP control account data. This is for direct expenses. I told you already, this is for direct expenses. Similarly, admin overhead control account data. This is indirect expenses. IDE. Similarly, admin next factory overhead control account data. This is also indirect expenses. Similarly, selling and distribution overhead control account data. This is also indirect expenses. To cash. Right. Next, recording of depreciation, transaction number 17. Transaction number 17. Recording of depreciation. Right. In financial books, entry depreciation account data to asset account in financial books, that we know that. But in cost books, depreciation related to factory, machine, depreciation related to office and admin, depreciation related to selling and distribution machine, right? Therefore, it should be transferred to respective control account. So, factory control, suppose there is machine in factory, it should be transferred to factory control account. So, factory control account. So, factory control account data. Similarly, admin also we have machinery, admin control account data. Similarly, selling and distribution also we have machinery, selling and distribution account data. To asset we are not supposed to use, so we have to use the term GLA, to GLA in cost books. In integral books, debit from cost, credit from financial we have to take. In integral books, debit from cost. So, factory overhead control account data are admin overhead control account data are selling and distribution overhead control account data are credit we have to use from financial, to asset account, that's it. Next, number 18, so number 18, absorption of factory overheads. Absorption means estimation of factory overheads. So, estimation of factory overheads in financial books, there is no entry, in the cost books, WIP control account data to factory overhead account, WIP to factory overhead. So, absorption of factory overhead means so it should be transferred to WIP to factory overhead. Any absorption transferred to WIP. Right. In integral books, same entry, there is no financial entry, no. Therefore, WIP control account data to factory overhead control account, Number 19, defective work. So, whenever there is a defective work or spoilage is there, in financial, there is no entry, but in cost, it is purely defective, it is a norm, it is a defective, it is abnormal, therefore, it should be transferred to costing P&L account debit side, costing profit and loss account debit side. So, costing P&L to WIP, because it is coming out of production, therefore, costing P&L account data to under process, costing P&L to WIP, right. In integral books, there is no financial transaction, what will be the transaction, the cost is same transaction, but instead of costing P&L, we have to say it is a purely only P&L account, P&L account data to WIP, P&L account data to WIP account. Instead of costing P&L account, we have to say only P&L account. Number 20, recording of cost of jobs. Now the job is completed. So, transaction number 20, now job completed. So, in financial, there is no entry. In financial, there is no entry. In financial. But in cost, so now the goods are ready, available for sale. Now it is going to the stock only initially. Before available for it is go to stock. Therefore, finished goods control account data, it is coming out of process to WIP. After WIP, it is transferred to finished goods. So finished goods control account data to WIP. Once stock is ready out of production, it is transferred to finished good. Finished goods control account data to WIP account. WIP control. In integral, there is no financial entry. Whatever the cost entry, same in integral entry, which means FG control account data to WIP, FG control to WIP. Transaction number 21. Transaction number 21. Recording of COGS. How the recording of COGS to be done? Recording of COGS. Cost of goods sold to be recorded. In financial, once cost of goods sold recorded, there is no entry. There is no entry in financial. But in cost, it is ready for sale. Sale. Okay, we have to take from stock. So it is transferred to cost of sale account. Data to FG control, to finished goods control, cost of sales account data to finished goods control. But in integral, entries are same. So cost of sales account data to FG control account. Number 21 transaction. Okay. Next, number 22, transaction number 22. So transaction number 22, recording of sales. So recording of sales. So how the entry to be sales recorded in financial books? Either sale for cash or for credit, right? No, credit sales. So in financial books, either cash or debtor to be debited to sales. In financial books, cash sales or credit sales, cash to sales or debtor to sales. But in cost books, cash and debtor is a word not to be used in cost books. We have to say general ledger control, GLA control. So GLA control account debtor to costing profit and loss account. Next, integral. So we can take cash and debtor, and to costing P&L we have to say only P&L. Right? Recording of sales. So cash bar debtor account debit to, instead of costing P&L we have to say only P&L. Integral accounts. We have to say only P&L account. So cash and debtors account data to P&L. Debit from financial, credit from cost, and credit from cost also, instead of costing P&L we have to use only P&L account. Number 23, absorption of admin overhead. Absorption. Estimation of admin overhead. In financial, there is no entry. In cost, absorption admin overheads, no, which means it is transferred to admin overhead control, credited to admin overhead control. So FG control account data to admin overhead control account, whenever there is any estimation of respective overhead, that overhead to be credited. Here admin overhead is recovered, no, admin overhead to be credited and FG to be debited. Similarly, next, integral accounts. There is no financial transaction. Whatever be the cost, same transaction. Therefore, FG control account data to admin overhead control account. Next, transaction number 23 is over. Now this is 23. Transaction number 24. So transaction number 24, absorption of selling overhead. Absorption of selling overhead, selling expenses. How the selling expenses to be absorbed? Right. In financial, there is no entry, but in cost, cost of sales to be debited, cost of sales account to be debited to selling and distribution overhead to be credited. Next, integral books. There is no financial entry. What will be the cost entry? Same in integral entry. So cost of sales account data to S&D overhead, selling and distribution overhead. Cost of sales to selling and distribution overhead. This is transaction number 24. Transaction number 25. Transaction number 25. Under absorption of overheads. What is under absorption? Estimation is less than actual. Estimated overhead E less than actual overhead, which means we have a loss. For example, estimated overhead is 10,000 rupees. Actual overhead is 12,000 rupees. We estimated 10,000, but actual expenses to 12,000. So there is a loss of 2,000. It is transferred to costing P&L account. So under absorption means estimated overhead less than actual overhead. So what is the difference here? 2,000. So 2,000 is called under absorption overheads. So in financial books, there is no entry for under absorption or over absorption. Here it is under absorption. There is no entry. But in cost books, it is a loss. What is the loss here? 2,000 is a loss. Therefore, costing profit loss account data. So costing P&L account data. Here the number is 2,000. Costing P&L account data to respective overhead. Overhead related to admin, or overhead related to production, or overhead related to selling. So overhead control, that is 2,000. So there is no cost transaction. There is no financial transactions here. Therefore, integral books entries are P&L account data to overhead control. P&L account data to overhead control. P&L control data to overhead control. Amount 2,000 in my example. So transaction number 26. So transaction number 26, over absorption. So over absorption of overheads. Here estimation actuals. Over absorption. Estimation 10,000. Actuals 7,000. Actual overhead 7,000. So estimation overhead is 10,000. Actual overhead 7,000. Here estimation greater than actual. How much greater? 3,000 greater. If so, estimated overhead greater than actual overhead 3,000. It is called over absorbed. What do you mean by this? It is called over absorbed. Right? How the over absorbed to be transferred? So there is no entry in financial. Over absorption is always a profit, because estimation is 10,000, actually 7,000. So 3,000 rupees we saved it. Therefore, it's a profit actually. It's a profit. Over absorption is always a profit. There is no entry in financial books. But in cost books. So overhead control account data to costing P&L account. So in my example, the profit of 3,000. Overhead control to costing P&L account is a profit. But in integral accounts, so overhead control to only P&L. It's a profit, no? It's a profit. So overhead control account data to P&L account. How much? 3,000. Instead of costing P&L, what to say? Only P&L. That's it. Subscribe to our YouTube channel Stride Edutech and press the bell icon to see new videos.